Okay, just a minute. Okay. Right, Susan, let me found page. Okay, all right, once again, good morning. All right, please get your friends come in because your friends will thank you after this. Because today at the back, I will share with you what's my take on the VIX. Yeah, the VIX. So I'll tell you my personal sharing, and of course, we hope that we can actually get something out of this itself. Okay, all right. So please get our friends to come in right now before we start the session. Okay. Okay, so without further ado, let's start the MAO for this morning. Okay, good morning to you once again. Today is the 28th of March 2022, Monday, a brand new start of the week. Good morning to you, Jerry, Janet, Sue, Alex, Karine, Dennis, Yo. All right, good morning to all of you. Now today, all right, you can see from my collage shows that, right, the title is it is a good time. Now this is a statement. It is a good time to buy VIX. Okay. Now I'm not asking you. Now usually I ask questions, right? But today I'm not asking you questions. I'm giving you a statement. I think that this is a good time to buy into VIX right now. Now last week I said that if you want to buy, you can buy between 24 to 20. Remember that? Okay, and I said that, right, if you want to buy, you can buy some, but if you want to wait for me to give you the call, then you wait for me to tell you. And now I'm informing you that now at 20, I think it's a pretty decent buy. Decent. Now nothing's 100%, but it's just a decent. And I'll explain to you more in details later today. Now today's topic, especially towards the alternative market news, will be a little bit dry, a bit heavy. And some people will be like, huh, what are you talking about? That type of feeling. Yeah, I understand that. But it's very important for me to lead you towards there so that you can understand why am I looking at the VIX today. Okay? All right, so please understand this as well. Okay? Now, as you can see from my collage, you can see that, right, retail space prices are going really down right now. That means that despite the economy is recovering, but actually retail spaces are actually going down because basically economy is not moving. And of course, Chinese stocks are still badly hit. And of course, with the ongoing now where China must take a side between Russia and Ukraine, or US in a way, then of course, they push China's companies in a very big dilemma. And nonetheless, Joe Biden has been pretty happy recently. Yeah, he's happy because he's seemingly able to get what he wants, but his rating is going down. In fact, his rating went back down to the level before the Ukraine war. Very interesting. So again, all these things will be covered during the MAO right now. Okay? All right, let's go. Disclaimer apply as usual, my friends. My job is to give you what I feel I can gather from the market, and you will make your own risk assessment. All right? You have to do your own risk assessment because I can't do it on your behalf. Okay? You have to do your homework. Okay, ladies and gentlemen. Okay? All right. So with this understanding here itself, right? Let's go. Now, the joke of the day, okay, to me, the joke of the day right now is actually the dollar. Now, the dollar itself was at 92 about a couple of months ago, and I tell you guys to buy into the US dollar, all right? And I mentioned very explicitly, very clearly, I said that the US dollar would be able to travel all the way to 100. Do you remember that? If you remember that, I say US dollar will hit 100, right? Can you do me a favor? Also copy the words I just typed. US dollar 100. All right. It means that if you remember that I said this, copy and paste it right in. Now it's just a serve as a reminder for you to look out for the dollar going to 100, and also subsequently yourself, right? Also to tell you that that we have predicted this months and months ago. Okay. Now, one thing to take note, very important, which have people been asking me over the last few weeks. Okay, Cal, how come Ukraine and Russia going for war? And evidently, we can see that this US is helping a lot, right? Then why is the US dollar going up? Would it be going down? Now, it's impossible for the US dollar to go down. I mean, I'm informing you, based on this fact. Let me explain this to you very easily. Yeah. Okay. So what happened is this. Okay, if a country is not doing well, right? Economy is doing badly. Usually the currency, okay, the currency will also go down. Okay, this is quite factual, yeah. Like example, when Singapore economy is not doing well, you will see the Singapore dollars depreciating in value because investors will run away. Investors will sell assets. Investors will move on. Okay, that's simple. So by right itself, right, if the currency actually goes up, that means that the economy is doing well. But the question is US doing well? Well, you can see that the non-farm payroll is getting better. The jobless claim is getting better. So probably it seems to be. But of course, at the same time, the GDP, most of the houses are all basically marking down. So that's where the question mark comes in. Now, one thing to note in the thing is that if there's going to be this thing called the waffle and raspberry, yeah, okay, then waffle and raspberry, then of course, usually if a country get involved with this, the currency will drop. Okay, this is without a doubt. But for US, it's a bit different. When US go for this WAR, okay, when you go for this itself, right, the US dollar will actually appreciate in value. The US dollar will actually appreciate in value because the demand for it become high. Three reasons. Number one, okay, the most important reason is because it become a safe haven. Because in their opinion itself, right, US can't lose this battle. So that's why it become a safe haven to buy into the US dollar. Number two, very important. When obviously you go to the war itself, you will use a lot of these armories. You need to use a lot of this, all these equipments and stuff like that. Definitely, that will increase the demand for the dollar. And of course, at the same time itself, right, there will be people supporting whichever country is in it. And I think if US in it itself, right, the bond market will also be doing pretty well. And that's why the dollar will also increase simultaneously at the same time. So that's whereby I want to inform you, if US really go into this thing called WAR, be mindful that based on history, the last 70 years, every time when US get involved with any what they call wars and stuff like that, all right, they will have the dollar going up. Okay, so of course the media that way the dollar is going to go down, the dollar is going to go selling off because of this thing here itself. I can tell you this history has proven that the dollar will go up and not down. Okay, this is very, very important. So why is this dollar in a balloon? Obviously, I'm trying to imply to you that this dollar is like a big, big balloon. It will go up. It will go up by itself because it is on the way up. Okay, it's under the point whereby when the market can't take this anymore, then probably the balloon will prick. Only then happen, because not now. Not now. It will take a while, not immediate. Okay, so understand this. All right, if you understand this is right, that'll be excellent. Give me some emoticon, please. Move your mouse or your handphone, and then send all the likes, the love, the care, and the ha 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 if you want to, and put it in so that I can enjoy this little interaction with you. Yeah. Now, as I say once again, today's MAO, the topic itself is a little bit heavy because it's going to cover a lot of things like bonds. Right, the bond market is even myself, I need to go through it 3-4 times to really understand it myself better. Yeah. Go on, yeah. Now, because of today, because of this morning, something happened back home itself, so I didn't have time to complete this one, so I'll leave it there. Now, we just completed our basic class 04, done already. It was a full house. Thank you very much for all the support. Now we're going to have our 15 intake, all right, and this coming in on the 2nd and 3rd of April, okay, 2nd and 3rd of April, all right, which is coming Saturday and Sunday, all right. So of course, the thing is this, okay, if you want to come in, we have ran out of seats. I repeat, we have ran out of seats, okay, because the last seat was taken last week. Thank you very much. But of course, just in case, if you really want, then you just put in the KIV list. That means that, right, if people can't make it because of maybe COVID, maybe because of something else happened at home, or they have some personal emergency, they can't make it in time, then of course, what you can do is that if you're on the KIV list, if there's anybody, it's going to be out, they will come in, okay? All right, again, I say, I don't think the management is going to increase the size of the class. I'll confirm with them later again, but for me, it's all right. I'm being told that the last person last week has already choked the seat, right? So shouldn't have any more, right? I'll ask management later, okay? But of course, the main thing is that if you once you join the TWB Premier class, you get to learn this thing called bombs and stars. And of course, you can see that, right? When the bombs are there, usually the market will bottom out. Now, all these things is for forward indicator. It means that you see the bomb first before the market goes up. That's the most powerful part. So if you see a star instead, that means that most probably the market might be coming down. So the star and bombs are forward indicator, yeah, not behind, not after it happened for a long while, then it appear to you. It's a forward indicator. That means that the moment you see it, you will know what to do, reaction with that, right? So yesterday, you can see here itself, all these are what I shared with you last week. And of course, if you combine the boys indicator, you will be able to get the best of it. Okay, all right, got it. So on Friday, I saw two counter, right? And I want to update this to you. Last Friday, you can see that Amazon, beautifully, Amazon was going up and a lot of people are looking to buy Amazon. But if you look at our indicator, it has a star on top. That means that the market is supposed to come down. And truth be told, after a while later, 5 minutes to be precise, straight away, you can see Amazon shares coming down. Got itself supported exactly at the KTR -1. So everything itself, you don't need to draw a single thing, no need trend line, I think. You see the chart, you just trade according to whatever you see online, all right? So contact Richard at 9274-9213 if you want to join us, the Premier package, all right? And you can see this is Alibaba. Alibaba has a bomb at the bottom, and that was where it actually went up. Then it hit a star, that was where you take some profit. The market eventually did came down, as you can see. So all this information will be available for you as a trader as long as you have the TWB Premier system. Okay, Premier, yeah, very, very important. Okay, all right, little marketing here yourself to just start off this morning. Remember 9274-9213. Okay, thank you. All right, now this week itself is going to be a very heavy week, although it looks short, but actually it comprises of 2 months data. First of all, on Tuesday, we have the consumer confidence, and the confidence number seemingly has dipped a little bit. It was the last time itself, it was 110, but now they're looking at 107. So it seems that the market knows something that we don't know. Now the JOLTS jobs opening, we are looking for the number to be the same, so nothing much will change. But on Wednesday, we have the ADP number, and that will be ADP number, yeah? That will be at 8:15 Singapore time. Remember, 8:15 p.m. Singapore time. Now the number itself, apparently, they're looking at a slightly lower number. The previous number was 475. This time around is 438. Okay. But very interesting is right, the fourth quarter GDP number, they're looking at a very big jump from last quarter to this quarter. I mean, sorry, quarter to quarter, okay, difference, so 7.1 now, because we have the stock market at record high back then, so it's actually kind of expected for the last quarter. Now, of course, after that, there will be the initial jobless claim, and the number seemingly to expect a little bit higher this time around. Okay, interesting. And of course, the non-farm payroll will be on Friday, the NFP. All right, and the market is looking at a much lower number. As you can see, the previous number was 678, and now looking at 475. Now, is this going to be a trap? Or is this going to be the real deal? We don't know. We let the market decide. But definitely this week will be a heavy week for traders in terms of data. You need to be around, okay? Now, last Friday, we saw the Dow Jones up by 153 points. Now, initially, it went up by almost 250 points. Then it gave back all the gains within an hour, went sideways for 2 hours, tried to recover a little bit, dipped down below, and last half an hour, the market came in to pump it up once again. So it's very clear that the market has no direction. It's more like funds are coming in to just pump around, and the people just buy around and get themselves either stuck or with some position that they don't want to do with. Yeah. All right, so a quick one is our S&P 500 rises Friday, posted the second winning week in a row. That means that they are up by 2 weeks in a row. Not bad, yeah? So rationale is that investors begin to weigh in the interest rate hikes and the war in Ukraine. And the rebound itself, right, because the market says that, okay, number one, we will absorb it, even though Federal Reserve say a rate high, even then Ukraine have battle, interest rate will go up, the market don't care anymore. They say that, okay, since there's nothing better to do and the bond market's coming down, let's buy some stocks, and stocks usually will yield profits. So that's the reason why that people are thinking that, look, economy-wise, South seemingly is okay. That's why you can see Federal Reserve hiking interest rate. Well, hiking interest rate is more for the inflation, not really because of the economy, but I will not want to debate. And of course, do understand this. Last week, we have the initial jobless claim going down to 1969, the lowest level. So that again tells you probably the economy is decent. Yeah. Now, the thing is this, the 10-year yield is rising at the same time that the belief in growth is not collapsing. It permitting the market and lifting stocks took a bit because it was an immediate concern of the impact of the war in Ukraine. So it's seemingly the yields is not really moving and representing what is happening now. So that's the reason why market is big question mark. All right. So let's look at the US market, Dow Jones first. You can see the Dow Jones tried to cross the RL of the BMB, but it didn't, it pulled back. Now there's a strong resistance at 34,974, which the market actually triggered at 956 and get pulled back. So that tells us that, right, it speaks volume regarding about what is going to happen in the later week. But nonetheless itself, that is how you have traded is on Friday. So let's take a look on Friday. So on Friday itself, initially the market went down first, then it ding dong, ding dong, ding dong, and the opening price. Then of course it went below OP and pivot 1. By right, it's a sell right here. But after a while later, you notice that there's a CCRY and the market crossed OP and pivot 1. So of course that means that whatever reason for selling is no longer usable, and that's why the market shoot up. But once it head up the sell right, it triggered all the technical level that I mentioned to you to be very careful. And then after that, almost instantly, the market came back down again. And then I believe that is where people went into short or call for sell. And of course, the people who are holding the option market was pretty happy. So that was what happened on Friday, okay, for the Dow Jones. Let's look at crude oil. Now, crude oil tried itself to stay afloat. Now, the pivot 2 level is 107.50.46. The market missed it by a fraction and then recover. And then when it recovered itself, right, you see you got its reserve, it's been rejected at 111.98 because that is the MLP zone, yeah? So with that as an concern as well, you can see that this counter here, okay, it's intraday movement. This counter move here was a bomb here. That's why the price goes up, the star there. That's why it got resisted, and then after that it came back down again. So all these tells you why the market is actually sideways for crude oil for now. But of course, once the boys come in, you can see the KSI jump straight away, CCRY, and it's above KTR -3, you can buy, right? Remember, even the basic student, you will know that I told you before that if you have an uptrend market, then look out for KTR -3 to long. If the market's uptrend itself, right? Uptrend, yeah, -3 to long, and the market is downtrend, then look for KTR +3 to take a short position. So that was what I explained to students. I hope they have registered. If not, they hear it live once again. So this is gold. Now gold tried to go up on Friday, but because there's some selling in the market, and that's why gold hang around. Now gold have a very strong stack at 1946 and 1950. So as long as the market doesn't break below it, the market in general will be going higher. So let's take a look itself, right? You can see over here, initially the market went up first, and the star was there. So you put the 2 lines, you will have the selling mode, okay? And then after it sold the way down, incredibly, the low of the day touched the pivot 2 beautifully to the point of accurate. And of course, after that, you can also see that it actually got supported by the MA. And so it got 2 green dots there. And of course, you have your CCRY coming in. Yeah, of course, the thing is this. And the thing is that market with so many reasons to buy, you cannot be going against it. That's why the gold price shot up a little bit. Okay, so that is how we trade the TWB system. We don't need to draw any single thing. No need to look at the news. No need to look at anything else. Just follow the colors and trade accordingly. All right, during their preferred GTH hours. Okay. What does GTH stand for? Good till. All right. Okay. All right. So let's just now take a look here itself, everybody. Okay, at the market for news, right? Golden trading hours. Yeah. Okay. Now Biden says Putin cannot remain in power. Now this is a very, very strong statement from Biden. Now, when this statement came out itself, right, we are half surprised. Are we going for World War III? Because this is like telling the whole world that you must take out Hitler, and that feeling itself. All right, then of course, what happened is the White House came in. But before that, you can see Biden was using all the words that he don't use previously, like a dictator, ban on rebuilding an empire, okay, and murderous dictator, war criminal. Oh my God, okay. He's been calling for this for the longest of time, but of course, for this statement of cannot remain in power, the very strong statement, White House came in and attempted to clarify that Biden was not discussing the Putin power in Russia, but rather making the point that Putin cannot allow to exercise power over his neighbors or the region. So he's trying to just water it down, not to feel that, wow, it's all right against him. But we can see that, right, he meant it very clearly. He really meant it, right? So the president now is actually Royal Castle in Warsaw, marking the final finale of the 3 days Euro trip. So rather than staying in US, he went around, obviously, to make sure that everybody have to take sides, okay? So this is what I'm seeing right now in the market. So he felt that, right, you know, whoever is going to, he feel that Putin is definitely a man to be blamed, and of course he is going to be like taken for justice. So if anybody or any country tries to support him, most probably it's all right, you know, you're going against the rest of the world or US. Okay, so that's what's happening right now in the front. Now, of course, this is going to be interesting. I know that this is not covered in mainstream media. I don't mind sharing this with you. Now, do you know that Biden tell US troops that they will be in Ukraine war gulf soon? So straight away, we all know that Biden said he will not send a single troop up. Won't, okay? But apparently, recently, right, Biden told the US troops in Poland that they will witness the bravery of the Ukrainian fighting the Russian invasion. Now, witness. Witness means stay at home to watch or physically there. Now, I think that the answer should be you know, more like being there, right? It makes more sense, okay? So what's happening now is that Biden doesn't seem to change his position. And he still thinks that being with his soldiers is more important now, because see that he's chowing now a pizza. Now, this particular division that we are now talking about is actually the 82nd Airborne Division. Now, I'm very, very sure that I actually ever used this 82nd Airborne Division as one of my MAO. I cannot remember what did I say, but I know that most probably they have done a pretty good job to do what they're supposed to do, yeah, according to what I can remember. Okay, let's give me a minute, yeah. Okay, so apparently Biden came in and says that, right, during his 19-minute session, he just said that, right, all this thing is actually, he talked about it and he just keep on reminding himself, saying that. So remember back then itself, right, he also said the same thing, all right, okay? So usually his remark, people don't really bother, but of course when he put it in such a specific way, some people get worried. And because of that, right, you know, people are asking, will US ever go into these chemical weapons? And US has to say no. So of course, this is what's happening. Right now, just to confirm, let you know, I'm not trying to make it out. This is the 82nd Division Infantry and Airborne Division. All right, so this is actually a parachute assault operation. Now, this is something that you heard me before, right? Okay, parachute assault. Okay, now, sorry. Okay, this thing itself is a more strategically mobile division. Okay, they move fast, attack, and go. That is why this particular division itself is one of the highly, if not most highly rated division. Yeah, 82nd Airborne. Now, Barclays expect big jump in Singapore growth after COVID measures are lifted. Yes, undeniable. I'm pretty sure when this thing is lifted and everybody play their part by not being to just take out their mask or on random, then I think we should be fine. All right, you can take a look right now. The numbers have dropped from 7,584 2 days ago to yesterday 6,434, and this morning itself is only 4,484. So sorry. So which means that, right, the numbers are actually coming down. Also because more people are falling sick. All right, once you get sick itself, you don't even bother to ask questions. You can just move on after 7 days. All right, so this is what's happening now. But at the same time, Shanghai is locking down in 2 stages for testing as COVID-19 cases spike. Okay, this is something that, again, China is doing. I didn't want to share this, but I feel that it's your obligation here itself. So what happened is that in China, there's a big case right now. A lady, a nurse, she had asthma. So she basically had asthma, wanted to get herself life being safe. She went back to the hospital that she's working, but because of the she needed to check whether she got a virus, and the security guards just say no to her, asked her to stay outside, and eventually she has to travel to another hospital to get herself safe because of asthma, but the entire duration was too long, and of course, unfortunately, she passed on. So you can see that right in China, the current situation now is really not as what you know. Things are getting a little bit different right now, right? So people are getting a bit upset, and if let's say now in the next 1 week, there is not going to be all the necessary food stuff coming in, then I think the Chinese might get a bit pissed off here. All right, so Singapore itself, right, just in case you didn't know or you're under the rock. Now, our group size from 29th of March is tomorrow, yeah? Tomorrow, not today, yeah? It will be able to go to 10. Yes, 10, which means that makan itself, eat food, rice, we can also have that. And I think the most important thing to a lot of people is this live performances can resume already. Wow, okay. And sales of consumption and alcohol can continue at 10:30 onwards. My God. So again, Singapore is really, really opening up. And of course, optional outdoor, but encourage engage in to wear masks. Yeah, if you are in a outdoor, but a lot of people wear masks, but it's mandatory in shopping malls, public transportation, and hawker center. That means that we go to shopping mall, your mask is still on. If you're taking MRT, still on, and of course you go for food center, still on. Yeah. Okay. Now, of course, the large event like birthday party, celebration, corporate D&D can all go already. Right. So that's why we're going to have inviting our TWB students to come back to the office to start trading together. It'll be a lot of fun, yeah. Okay, then of course, and of course at the same time, we have workplace going back to work and VTL. All right, okay. Now the Russian oligarchs are now welcome in Turkey. All right, apparently, right now these Russian billionaires are running out and nowhere to go. So Turkey came in and said that, look, as long as you park your yacht outside the territorial water, you should be fine. So let's take a look at those beautiful yachts. My God, this is one. Solaris is actually belongs to Russian oligarch Roman Abramovich. All right, this is the one beautiful yacht. All right, and now it's parked at Turkey. Okay, so pretty cool. I'm quite sure the parking fee not cheap. Yeah. All right, so this is the guy. This is the guy you've already noticed that this is the one that owns Chelsea. Yes, and Chelsea, the football club. Yeah. Okay, all right, so got an idea now regarding about what you're seeing right now, and of course, what is happening around the whole world. Let's look at something more important. Now, Morgan Stanley says these Chinese stocks could rebound, but Alibaba and Tencent ain't on the list. That means not in the list. So they think that right now is not the best time to buy, but it's decent time to buy, and they feel that the current overweight rated Chinese stocks now are good to go because of recent sell-off. But there are at least 38 companies that they think are pretty decent. But the one that didn't make the list is actually Tencent, Alibaba, Jingdong, Bilibili, and Yo. So it seems that other companies are still able to continue with their facility with them, but not for this company. So again, that's one of the reasons why some of the technology stocks are coming down because the leaders are not there. Okay, all right. Now, Bill Miller, okay, he is the founder of the Miller Value Partners, say that he remains bullish. He remains bullish on the economy and think that the Federal Reserve move to raise interest rate is actually going to move it higher. Well, he says that look at it. The last few weeks itself, the index actually goes up, but the so-called people going out rate is high. So to him itself, all these are good things. Yeah, he feel that the strong U.S. economy with low employment, plentiful jobs, rising wages, the strongest growth in the 5 years, and a Fed about to raise rate, all looks good. But the thing is that I don't know why he's saying that way, because we all know that the Fed haven't only increased one time only. Okay, all right. But of course, he said that because the sizable correctional move in 2020, that probably is the one low that people should be buying and not now, or maybe they can still buy, but just go slow a little bit. Yeah. So of course, he talked about the energy market. He says that energy stocks do not reflect even the crude oil 70, so don't talk about 100. So he said that there's a lot of good energy stocks are good to buy. Chinese stocks already tell you that, right, because of the slow of regulation. So now the thing is this, okay, so this is what is happening. I think this is not important to us for today. All right, so you talk about financial and housing. He said that, right, these counters are also very good. The valuation now is a low or mid digit. So that means, again, shows that some of this housing are good to buy. Okay, and last but not least, he's talking about the some other company like the airlines and cruise, that they should recover because of the robust company. And of course, a company like Amazon and Meta are also very attractive, according to him. Okay, so all these are actually said by him, the Miller guy. Okay, now do I agree? Yes and no. I agree that the stock market will recover in the next 6 months, but I don't agree the next 2 months it will go up too much. Disagree, yeah? Okay. So investors now fear that a recession is around the corner. How to protect it, right? So very simple. It is something that you have to understand that at the moment now, the situation is that a lot of big money investors like this Carl Icahn, Jeffrey Gundlach, and more are looking at the market to fall. So of course, if that is really the case, then the rationale is because the current inflation rate. But of course, during such a thing, the US banks will benefit because more and more people will be paying them the interest. All right, but once again, this bond king Jeffrey Gundlach, the guy I said last week, I speculate a recession is nearby, and of course we did saw this Carl Icahn. He says that, right, there will be a high chance that the market may actually enter recession. Yeah, okay, can you see that? Carl Icahn, okay, favorite investor. Okay. All right, now of course, inverted yield curve is the one that's going to be the most damaging. I'll talk about this inverted yield curve shortly later. Yeah. All right, so how to cushion a portfolio? Of course, you must save some money, that's for sure. Then, of course, get counters that are good with dividend. And last but not least, for anything itself, right, just see and check if your friends and counterparties that they can do it. All right, so dividends is important. There's some company like Procter & Gamble, Kellogg's, Coca-Cola, and General Mills, they are all pretty good with this so-called earnings, yeah, in terms of dividend. Okay, all right, and of course, if you last but not least to protect yourself, you must go for the safe haven there. We're talking about gold, we're talking about bonds, we're talking about even potential cryptocurrency. But cryptocurrency, must be very careful. There are some who are saying that, right, the UK government is going to really consider to do something with it. Yeah. Okay, got it. Okay, all right. So now the stock market, people are actually thinking that the market may be able to pull off a soft landing. Now this morning when I'm doing the MAO itself, right, preparing all the notes, apparently, right, the notes basically, and most everybody, all the articles are very bullish. Then of course, last Saturday itself, right, attended a little talk and talking about stock market. And of course, generally more than 200 people or 300 people are very bullish in the market. And of course, even my own students, they are telling me they are also very bullish in the market. So to me, it's all right. The market should stay bull, but until then, yeah, because if not, it's all right. You might be hurt by the end of the day. All right. So let's just ask everybody here itself. There are about 97 of you right now. How many of you are bullish? How many of you are bearish with the market right now? Please key your answer. Let me know, are you bullish or are you bearish right now? Please key your answer while I have a second sip of the coffee. Okay, so we're getting some news right now. Okay, we have bullish by Joseph, Sue bearish, Fred Martin bearish, Anthony bearish. Jerry bear, Daniel bear, Susan bear, Dennis bull, Peter Leong bear. So you're bullish for now, scared that it's a bull trap. Leslie says bull. Kai say off from Germany all the way say bear. Lee say bullish, and Leon say it's bearish. Okay, so seemingly a little bit more bear than bull over here. Okay, all right. Are you influenced by me, by the way? Are you influenced by me? Because I'm just telling you guys a bit more bear recently. You guys are influenced by me? Or do you think that your own opinion also gathered to you that you think the market is going to be bearish? All right. All right. So the thing is this, okay, I will just remember that a very nice lady told me that the current situation in the import-export business and actually in steel is not doing very well and prices are increasing. But that means that, right, the cost will be thrown to the consumer, or probably they're going to cost the supplier more money, and then they have to basically, if you don't get business, they will mark the price while getting a heavy cost. I mean, the profit sharing will go down. So there's a lot of good reason why. Yeah, okay, so let's see. All right, influenced by me. Okay, all right, Leon, thanks for being so straightforward, yeah? Okay, all right. Now, the thing is this, the first thing is that they say why there could be a soft landing, okay? A little bit contrary to what I'll share later, but never mind, I share first. The CBOE S&P 500 Volatility Index, or simply put, the VIX, yeah? The VIX has sunk from an agitated 29 to more normal 22, and in fact itself, it went to 20 yesterday, on Friday. All right, and the high yield corporate bond spread have tightened up. Okay, so this you can see from here. Even though the 10-year treasury is down 2.8%, jumped to 2.5%, and the 2-year, the close proximity of the anticipated rate hike has hit 2.3%. So which means that now, right, the rate is looking at 2.3%, but the current rate itself is only 0.5. We're still a very, very far-fetched from the whatever is being in the market right now versus the current situation. Okay. Now the thing is this: according to this article, all right, Powell cited that the soft landing in 1965, 1984, and 1994 in support of this case, his case that one can achieve again. For a reason, in 1994, the tightening cycle has become the key touchstone. In the 60s, it was more of an elongated rate normalization effort. Okay, you can read it on your own. I'll send the link later to all my students. But in short itself, right, in 1994, an economy started to run hot when it met with 3 percentage point rate hike from Alan Greenspan. And that's forestalling a threatening rise in inflation, even though unemployment continued to fall and corporate profit grew nicely. Now, I want to challenge this because in 1990 to 2000, one president was having his best time as a president as compared to the last 5. Okay, the last 3 and the previous before him, and that was Bill Clinton. Bill Clinton is the only president that actually clocked in a positive surplus. Okay, surplus in short, during his administration. Yes, he's the only president, the 10 years golden cycle. Okay, that's why when the interest rate was going up itself, right, he still benefited. But you must understand, before that itself, in 1987 was a Wall Street stock market crash. And how much money was pumped in, we all know that, to save the day. So that's the point here itself, is that the economists, they like to tell you this thing here itself, but they do not tell you what happened before that. That is something that I didn't like about this article. But anyway, because I'm showing you this article, I have to be fair. I want to share you more. Take a look, yeah. So now I'm telling you this from 1994 onwards, analog for S&P. You can see that now, if you put the 1994 cycle and the current cycle, in their opinion, it seems like actually the same. I don't know. It looks like the same, but not really the same. Don't you feel that way? Okay. Anyway, the S&P 500 has now came down by 10%, and it now is range bound. Okay. Now, a guy called John, he's a micro strategist, says that, right, if you look at it itself, they find it a similar contour. I cannot see how it looks the same, but I'm just gonna buy it. Okay, so you get my point of this article. That's why I feel a little bit short-changed in a way. All right, or two. All right, so but of course there are people who say this. Okay, no, this may not be a soft landing. All right, first of all, this guy from this Piper Sandler says that bottom line, 61 years of data, 8 recession. Of all of them associated with federal tightening in the vicinity of or above neutral, okay? And one exception of the rule 1994, okay? So that means that 1944 was a very special year itself. And that means that, right, okay, all these things is there. So of course, we are now in a position whereby we may see recession, but because the argument is that, right, we have pretty decent recovery in the stock market, it may not be. So in short, there is a potential of a recession, the one that I've been telling you guys for longest a while, but they feel that, right, maybe we can go around it and escape this. So I'll leave it there for you to decide. Yeah, I don't know whether what is what, but this article telling you that, right, the Federal Reserves really believe that they can go for a soft landing. All right, thank you, Kelsa, all the way from Dhaka City. Wow, all the way from, this is, where is that place? Bangladesh. Oh, yeah, okay, that's a nice place there. Okay, all right, so this is what I gathered for you in terms of this part here. Now, we're gonna go into something very dry right now, okay? Something very dry. It's gonna be the bond market. Now, I'm gonna just touch and go. I'm not gonna really explain in great detail because this is gonna be very heavy. So I'm gonna just skim past, okay? If you can understand this, good. If you don't understand what you're trying to say, you can do some Googling and then get yourself, clear on certain part of it, okay? Are you ready, guys? If you're ready, please key the word ready right now. Let me just see, are you guys still around with me, all right? All right, if you're ready for this part, then good, because it's going to combine with what I feel about the market with the VIX. Yep, it would last about 10 minutes. Yeah, if you think that, oh, this guy is talking something scary now, I don't listen to him, then you can go now and leave for 10 minutes and come back 10 minutes later, okay? All right, give me some water. Okay, Terry, say you're ready. Eugenia, ready. Leslie, Yo, Leon, Kai, all of you are ready. Wow, it's okay. Susan, David, Anthony, Sue. All right, all of you are ready, yeah? Okay, ever ready. Thank you. All right, let's go. Now, today, alternate market news is going to give you some stuff on the bonds market. And of course, it's a little bit heavy, so let's go with it. Now, first of all, you must understand the faltering market liquidity renews probing for Treasuries buyback. Okay, in short, Treasuries has not done buyback of the off the run for the last 2 decades. Never done before, and now it's coming back. Some dealers says it as adding a backstop as Federal Reserve withdraw. Now, Federal Reserve is withdrawing, right? So that is where it's happening. Now, the escalation of liquidity troubles in US Treasuries caused by the strain tied to the Russian invasion of Ukraine is giving a fresh impetus to the call for the government to revive purchases of the older securities, a move that could improve trading conditions. But the problem is this, if you buy the older securities with a lower interest rate, it's okay. That means it's just like refinancing. But if you're going to buy the older securities to using new securities, then but your interest rate is higher, right? That means you're going to spend more money to buy something that is, cheaper. You got my point, yeah? So this is something that is where the problem is ongoing right now. The current situation is easing, all right? Because why is financial condition easing after the Federal Reserve rate hike? Well, apparently itself, right? They have to do it. If not, they'll be in serious trouble. And apparently the stock market, right, is not actually not following. Because you see, when Federal Reserve increase interest rate, normally, Economic 101, stock market should come down. But the last 2 weeks itself, right, the stock market actually goes up. But I will beg to differ is that if you're going to emphasize that the stock market actually went up, right, it's actually wrong, because in January, that is where the stock market has its peak. Now already at March end. If you look carefully itself, right, we are more than 1,000 points away from the high. Yes, we are now 1,200 points away from the recent low, but in overall aspect, we are actually still down. So let me just bring the chart to you just for argument's sake. Yeah, give me a moment. Yeah, let me just bring the chart in. Now, because what happened is that when I was doing this article also, right, and I was just talking to a friend of mine last week, the thing is this, they were telling me, Cal, you're wrong. The market is going up. I said, why do you say that? They said, no, you see, the market actually went up right from here to here. That means that from here itself was 32,400. The market has went up all the way to 34,800. Now, the thing is this, the surprising part is that I tell everybody to go long during this period of time. That means from 32,800, I call for long. I say the market go up for 4 or 5 days until the end of the quadruple witching. That was what I said. Then last week, I said that market should actually be moving downwards. But because last week, you notice this, last week, the entire 5 days, the market is in this box here that just drawn. Hence, therefore, people's perception is that the market didn't go down. Okay. So when I say go buy, you guys disagree. When it went up itself, you ask me can buy. I say that be careful. But just because the next 5 days the market hardly move in a square area, you guys think that the market is not going down. But then can I ask you this? This is the high. 36,940 is the high. Today the price now is 34,800. Can you understand? Can you explain to me again? In numbers and form, are we not down or up? That's the thing I don't understand. Okay. Next thing is this. As a trader, being objective, let's just clear the sign. This is A, this is B, and now we are at C. I'm pretty sure B is lower than A. And I'm pretty sure now C is below B. In terms of RSI common points, we are now around the common points. So don't you think that we should be worried than being optimistic? Okay. Last but not least, very important. All right, very important. The Fibonacci. Okay, now watch this. This is going to be very important, guys. I'm going to make it as tight as possible to be as close as possible to the numbers. Here we go. Okay, so let's watch this Fibonacci and we get ourselves into this, yeah? Okay, so now you can see now this is the highest point A, this is the lowest point B. And after the A and B, we do a Fibonacci. So now the 61.8 will be here at 35,100. You can see the number here back about there, about 160. Okay. The 61.8 tells me that 35,160 is actually the 61.8 level. Now, the Dow can continue to go higher. It can. All right. And even if you go to 61.8, this point here itself, right? Okay, this point is still going to be higher than here. Okay, so there's something to take note of. Now, we have a very strong 50% thingy, whereby you can see the market is trying to stay above the 50% mark. And this particular figure is 34,613, all right, around there. So the Dow Jones have been trying to hold around there and finally went above it. So by right, it's pretty bullish, 34,600. Okay, so simply put, as long as the Dow Jones can stay up, Dow Jones can come to here, 35,160. Okay, so I'm going to write it down now. Dow, okay, write down here. Now Dow is 34,860. Okay, if there is further upside, the next target is 35,160. downside, $34,613. Okay, all this now for you guys. Take a look. Okay, so basically, as long as the Dow Jones can stay above 34,613, the Dow Jones should be still all right. But if the Dow Jones ever breaks below 34,613, then I can be honest to tell you that the next figure could actually be down all the way to C. And this C I'm looking at, which means that we're talking about 31,000 level. Now, I know by saying this, it's going to freak a lot of people out, and I'm going to get a lot of slap in the face if I'm wrong, but let me be upfront again. I give you two sides view, okay? That means that first, the upside itself is 500 points. The upside itself is 500 points. The downside itself can be as much as 3,000 points. Can you understand what I've just said? I repeat, upside 500 points, downside 3,000 points. Now I know by saying this, I'm sure many of you are going to be happy, especially if you are bullish. But allow me to explain this again in a very, what you call technical approach here. Now you can see that this is the common point of the RSI. Can you see this too? Yeah. Okay. Now this is X and this is Y. All right. Now you notice this here itself, right? Okay, this is X and this is Y. This is X1, this is Y1. Now you notice that Y1 is lower than X1, despite that now they are X and Y at the common point. So mathematically speaking, if let's say the Dow really comes down, I don't know when, and the RSI comes down to here, okay, this will create a Z, right? Yeah, Z. Okay. The question is, if that is the case, then the market may come down to here to create Z1. Can you see my point now? That means that, right, if let's say we're talking about upside, we can see about 35,316. Okay, that's the upside. All right, but on the downside, what we can see is that the market may actually travel down to 31,000 to complete Z. Okay, so that is the reason why I want to share this with you today. All right, now let me explain to you more with fundamental that instead of just pure technical. Yeah, I want to explain to you more with that. Yeah, just give me a moment. Let me just take a picture here itself to make sure I validate this once and for all. Yep. Okay. Okay, let me explain to you fundamental why am I getting a little bit worried on this. Okay, let me explain this slowly with you. Okay, no worry on that. Yep. Okay, because the problem is this, the stock market has already priced in the 0.25. Not 0.5. The market only priced in the 0.25. So that's the reason why the Dow Jones actually went up. Because the market was looking at 0.25 increment, and that's why the last FOMC meeting, when Jerome Powell and friends do a 0.25, the market priced in. Because the market had already priced in, that's why the market recovered, because the market already priced in. You understand my point? Yes, because it already priced in. So because of that, now people sell news, then buy on facts. So when they sold before that itself, right, it's towards FOMC. But when FOMC has finished, the relief is done, they buy back the situation. So now we have a historic treasury sell-off, open reef between old and new bonds. Okay, now the thing is old and new bonds, right? The old bonds is in the market. When it's near expiration itself, what happened is that they take the new bonds to come into the market, right? So usually what the people will do is that they'll sell away the old bonds to buy the new bonds. Okay, that's how usually it works. But now we have a problem. Okay, the ongoing bloodbath, as you can see, the yields are going up, meaning the bond price is coming down, right? Okay, the ongoing bloodbath in the US Treasury market is increasing the relative value of the most recent issued bonds and notes. Okay, highlighting the value of liquidity in a very dangerous market situation. Yeah. Okay, so basically, recent disruption of potential reforms in the US Treasury market. This is actually a report done back last year, November. Okay, real stuff. Yeah. So in the report, there is something you must understand. The disruption to Treasury market caught many participants and observers by surprise. because they were driven by the heavy sales during a period whereby they had expected a flight to safety to bolster demand for treasury securities. Typically, demand for treasury securities increases during market shocks as investors seek to hold safe and liquid assets. However, investors value treasury securities in part because they are easy to liquidate. All right. So you can see that there's some expectation that things should happen, but it did not happen. In fact, it went the other way around. So what happened now is that the demand for market liquidity and funding liquidity came from many sources. A broad range of investors wanted to sell off the most of the run and the longer dated securities in favor of cash and cash-like instrument as treasury bills. Okay. Now, at the same time, many market participants sought funding against treasury collateral. That means that, right, people, instead of holding the bonds, they actually sell off because they want to take the money for something else. So putting the bond market, instead of the one that usually for asset protection, become a collateral instead. So all these are actually happening right now in the market. And because of that, right, you can see why is that so. Ever since the quantitative tightening has begun, right, when Federal Reserve removed $10 to $15 billion from the market, you can see that effectively the number of the liquidity become a problem. The liquidity become a problem. Okay, and when liquidity become a problem itself, right, definitely people will get panicked. And this is the why you can see that the gauge of treasury liquidity has deteriorated because of this QT, quantitative tightening. And because of that itself, right, the treasury buybacks costs have increased really to a crazy point. All right, something has changed during the last few months, since September, during the quantitative tightening. So now the thing is this, you are now using the new to buy the old, but don't forget the interest rate is rising. So because of that itself, right, this will actually causes a bigger problem, okay? Because you're going to cost more money. All right, going to cost more money itself, and that is the reason why there are more and more concern of the market. Now, like it or not itself, you can see right now, compiled by JP Morgan, okay, says that, right, the current situation, the ability to trade without substantially moving prices has deteriorated to level not seen since 2020 April, and that's during the pandemic time. Okay, so counterparties to repurchases agreement are failing. Yes, because they are not repurchasing. Now, usually, example, if you lend money from a friend of yours, if your friend keep on lending to you, you return back to them, it's fine. But one day itself, right, you return to your friend, and your friend don't want to lend to you, right, then we have a problem. You understand my point? To make it simply put, yeah? All right, because now there's a problem doing that. And dealers in and off the run securities now has tumbled. That means that there are lesser people involved because there's no one really want to take up this deal, and people are getting very worried. That is the biggest concern. Now, why think about this? If we have margin calls coming from the commodity market like the nickel and the crude oil in a way, then naturally it's all right. Seriously, it's just a matter of time itself. There could be margin calls coming on the bonds market if the liquidity really run dry. Do you understand where am I coming from? So you can see now, right, the bond ETF and the mutual fund flows are dipping down, as you can see. Now, the last time we see a dip like this was back in March 2020. That was whereby the pandemic happened. So unless the Federal Reserve were to go back in their words itself, which they can't go back because they are now just finally reached this point itself, right? That means that, right, the next bubble that could happen, it could be actually the bond market. And this is going to be pretty scary, okay? Pretty scary. And of course, if you can recall back in memory itself, all right, in memory, let me just try to dig it up for you. Just give me a short moment, let me just dig it up for you. Okay, just give me a moment. Let me just dig out everything, dig something for you. Yeah. Okay, remember this? Here we go. Do you remember that Michael Burry, the guy who basically made a lot of money and pretty big shot, right? He actually put a bearish bet, okay, a very bearish bond bet in the market, very bearish bond bet. because he expected the treasury to sink. Now, I cannot remember, did he buy back his position? If I'm wrong, I apologize, because this is based on my last memory, okay? Now, you can see over here itself, the most notable bond that he's shorting is all this. Take a look. Take a look. Tesla, Cathy Wood ETF, and the largest ETF, iShares 20 Treasury Bonds ETF. Okay, I'm going to show it to you this one now. Okay, all right, I'm going to show you live right now. Now, I'm not making things out of nowhere and trying to be a naysayer and trying to tell you things doomsday player. No, I'm trying to tell you stuff that is in the market. Now, at the end of the day, it's all right, whether you believe it or you don't, or the market, the trade goes correct or wrong. I mean, I'm not here to justify for you. Anyway, I'm just sharing with you stuff. Okay, so take a look right now. Just give me a moment. TLT, okay, not moving. You can see now the thing itself. Remember, you see my beautiful rainbows Fibonacci. Remember, I told you guys, right, once the market broke here, remember that was about months ago, back in January or February, can remember? I mean, about last year, okay? When the market broke here itself, I told you guys this is really a big problem. And of course, the last one that broke the camel's back was 135. Remember, around 135, 136, I told you guys, once the market loses this, the market will come down. Remember that, TLT. And now it's coming down. Can you see this? Now, I know that some people are calling for buying on these bonds. I say, no way. I'm telling you this, I think we will see 125 in the near term. Right, based on my 124 to be precise, 123, sorry, to be precise, is 123 level. We are 5 full points away. Okay, and you can see the volume has increased humongous. The volume have increased really a lot last few weeks. So this actually tells you something is definitely very wrong with the entire system. All right. Now, of course, once again, people will say, no, once a bond goes to a good price, people will buy. I say, yes, I think that will come with margin calls in at the start first. Yeah. So this is whereby I'm just sharing with you my view, and I've been very consistent with this particular segment here itself, as you know, correct? Okay. All right. So now you can see that this is actually really happening in the financial market. And of course, the one that most updated now is the yield, okay? This is the 2 years and 10-year yield, and we are getting nearer and nearer to the point of the inversion that we are expecting that might happen. And when that really happens itself, most likely that will ring the alarm bell and cause what we fear most is a recession, okay? But at the moment, we are still a little bit away. So of course, some people say, no, it won't happen. I'll leave it there. I say, I'm not here to procrastinate and tell you that the market is going to go down or go up and stuff like that. You just have to make your own personal take from here, yeah? But now we all know that, right, there is a very high chance in May that it's going to be the interest rate will be at least 50 basis point. 50, because 70.5% of people are looking at least 50 basis point. Okay, so 50 basis point is going to happen. Yeah, it's going to happen. And this is going to be bad. Okay, this is going to be bad because the market haven't really digested 50 basis point yet, even though recently we're just talking about it. Okay, all right. So now what happened is that the Bank of America funds survey says that, right, a strong read of March can continue further to test high. Okay, so that is the positive side. But the contrarian to it itself, right, apparently some people are saying that this could be a strong selling opportunity. Some, they even say that the market may likely go down to 4,000 instead of 5,000. Okay, so a little bit interesting here itself. All right, now you can see that there's a lot of funds still coming into the sector. That's why you can see why the market recently has some buying, because there are still funds flowing into the tech sector. That's why you see the FANGs counter are recovering. But FYI, the amount of funds that come in is no longer in terms of the same magnitude. But of course, the last of March itself, more buy than sell. Yeah, more buy than sell. Okay, more buy than sell on the daily schedule. That's why you see the Nasdaq counters are still pretty bullish, right? Yeah, okay. So Barclays has just cut its 2022 price and per share earnings target for the S&P 500. They have trimmed it from 4,008 to 4,005, and the EPS target from 235 to 223. So this is from Barclays. So again, of course, the thing is this, right? from many, if not majority, if not 90% to almost 95% of the houses all looking bullish, suddenly now things are changing a little bit. Now, of course, some people will say that maybe, Cal, you're just showing us all a negative picture, you can show the positive picture. I tried. That's why at the start of the MAO, right, until we reach this segment itself, I did talk about all the positive side. I talked about who say what they are buying and stuff like that. It's just that this side now is all mostly negative stuff, okay? And they actually tell their clients in the written way, the clients we met were looking to sell the rally than chase after it. So which means that now clients are smarter. They're telling their fund manager, look, I'm not going to buy more, I'm going to sell. So again, maybe these people are going to be wrong, but I believe that these are all the high-end clients and they are all much more savvy. So this is going to be very, very interesting, yeah? Okay, so that's the reason why I want to talk about VIX to you today. All right, we're done with bonds, so you know what I'm trying to say now. So if let's say there's going to be any big calamity happening in the financial market, then the VIX itself would be the best tool in my opinion. Okay, let me bring to you now why I say VIX. Okay, let's talk about it. On here. Okay, now first of all, let's understand VIX first to begin with. Now, VIX in 1993, the CBOE Global Market Incorporation, the CBOE, introduced the CBOE Volatility Index called VIX, okay, registered index, yeah, which was originally designed to measure the world expectation of the 30 days volatility implied by the at-the-money S&P index option prices. Okay, all right, so that one came very, very back, 1993. But of course, we all know that, right? The real start itself is only in 2004, whereby it marked the first day of the VIX futures. A VIX option offering was also launched on February 2005, and they become one of the most traded derivatives assets. Okay, now all this information is very important to talk about it because we want to know exactly when the main liquidity comes in. Now, it was the most highlighted back in Lehman Brothers time when it went up. Okay, so got an idea now? Okay, good. So now why I want to talk about the VIX itself. Let's take a look at VIX ourselves, yeah? Let's take a look. Now this is VIX now, this is a spot market, not the futures price. So one in AIMS itself, we're talking about the CFD price. Now look at it now, today the VIX closed at 20.81, okay? Remember I told you between 24 to 20, you can try to buy some VIX. And of course now today we have 20.81. Okay, now before we go into that point, let's stress let's squeeze the chart. Yeah, let's squeeze the chart up. Go to monthly chart. Yeah, squeeze until to the end, and then drop the data and move it back again. Can you take a look right now? Yes, indeed, 2019 to 1994. That was where it actually officially, in a way, started. 91 to be precise, but 94. Okay, so anyway, do note. Okay, this is where it gets really, really exciting and scary at the same time. Now, do note once again, now this is where the low was, and this low itself was apparently about 8. Then after that, here itself is about 8. And this low itself is about 8. Can you see my point? So in 1994, it was at 8. In year 2006, it was at 8. In 2017, it was also at 8. Can you see that? Okay. So the thing is this, what do you think, how low will it be going? I think the number will be 8. Okay, so now if you buy at 20, if I buy at 20, all right, the lowest low is 8. So that means that this will be my so-called potential losses. That means if I buy at 20 and the price come down and I really follow what this chart says and cut at 8, yeah, I lost 12 full points. Now, 12 full points is how much money? Now, one single contract is about, for one single contract, yeah? So let's say now I buy at 20 and I buy for one full contract. Then when I sell at 30, I will make how much money? US $1,000. Can you get it? Yeah. $1,000. So which means that, right, if I buy at 20, okay, other than the margin I pay, all right, it could be less than $100. Well, if it goes up from 20 to 30, I make 1,000. But if from 20 to 8, I lose 1,002. Now, of course, at this junction here, you say, oh, not a good bet because upside is only $1,000. Downside can be as much as 1,002. Well, yes, indeed, you're not wrong to say that. But the question is, if ever this counter can go down to 8, I think I will buy and buy and buy. It's just like buying DBS at $3. And because you went to $2.70, you cut loss and you feel proud of it. Yes, it's just like buying our national bank at $3 when now it's at $30. And now it's $3 you are asked to buy. You don't want to buy because after you bought it yourself, because you go to $2.70, you cut your losses, something like that. So to me, this is a very good time to look at it. A very, very good time. Okay. So now if I change this chart away and go back to our current situation, can you see right now? This is what I'm seeing. Now, based on the chart that I have, okay, like I say once again, this is the common point. This is A and this is B. Okay, so you can see that this is where it stopped at 15. Now B has already reached common point, but now it's only at 21. So which means that we have actually a uptick movement. That means this thing itself, right, shows that we are actually on an uptrend basis. So there's no need to short. You can look for buy instead. All right. So now you look at it again, recently itself, right, all of them have one very interesting thing. Look at the red bar before the green bar. All right, I'm going to show it to you a little bit bigger. Just take a look for a short moment. Let's make it bigger. Now you can see right now. Okay. Can you see right now? Before the market shoot up, you notice what happened on the day before? Do you remember? Can you see that? Before the market actually shoot up, right? There's something that will happen. All right, can you take a look and tell me now, before the market shoot up itself, right, something must happen first on the candle. Can you answer me? Let me know. Right, waiting for answers. Anybody gonna write me some answers? All right. So while waiting for your answers, I cannot wait perpetually. Bar low. That means that the market closed near the low. Now, usually when we see this in an uptrend market, right, we call it as ROC, rate of change in BTP. So when the market is near the low or close at the low, we know that, right, tomorrow, which is today, will be an interesting to watch day, okay? And of course, I'm still looking to buy. Then of course, I'm looking to see whether today can we buy something cheaper before it goes up. All right. So Susan and Kai, okay, you guys have answered. Thank you very much. Okay. All right. So got an idea now? Now the thing is this: if you look at it right now, if based on the technical analysis of this, if I buy at 20, the upside potential can go be at least 38 to 40 because based on the technical, it should be like that. So let's say now we really buy at 20 and sell at 40, I will make $2,000. The downside itself is 8. Then let's say I talk about this is 1,002. So which means that, right, upside is 2,000, downside is 1,002. So I think that, right, it makes a lot of sense for me to buy some and see what will happen. Okay. But please understand this trade can go wrong. Any trade in the world can go wrong. But this trade itself mathematically is on our side. So that's why today MAO, the title is a statement. It's not a question. I'm just informing you, right? Tonight could be a good time to look at it. Okay. So all these are something that you must take note of. The downside first, and you must take note before you get upside. Okay. Upside is of course much more favorable than the downside lah, of course. Yeah. Okay, and if I make the chart a little bit smaller further, And if any time, if there's going to be any particular reason that causes the bond price to do something very badly, the last time when this happened itself, right? If you notice this, okay, the VIX went up all the way to 84. Where it came from again? It came from about 26. Okay, how long did it took? About less than 3 months. The last time this happened again, that was around 10. It went all the way to as high as 50. Okay, so now I'm just only looking at 40 to begin with. Okay, 40 to begin with. Not even looking at anything crazy. If anything go crazy, and why not itself and go up to maybe, let's say, 78 or even 80, then that means that it's going to be a very incredible time for all of us. Okay, but again, I say this is all purely speculative and of course based on what I mentioned. So you guys make your own decision. Okay, I cannot answer for you, Leon. So I cannot answer for you. Okay, what will be doing? I will be doing things that I should be doing. About you, I'm not too sure. Okay, got it. So that's the reason why am I looking at VIX very closely these few days. Okay, got it. All right. Okay, so once again, guys, my class is over. So now you're going to join the class for the 15 intake, right? Please contact us. Okay, 9274-9213. Okay. All right, let's look at the charts right now. The bull goes moo, the bear goes grrr, and the flamingo is different this time. Let's do a quick one before we go for lunch. Thank you for holding with me all until now. Now, we can see that the Chinese market really fell, and beautifully, I told you, right, at 13,243, it will be the MLP that we are talking about, and once the Chinese market hit this point, it will recover. I said this last week, I repeated myself, and I told you what to look out for. I give a specific number, and of course, it really touch and go. So that's the reason why our MAO is getting so many traction, because people really see that it works. Okay, so this number 13,243, as long as the market doesn't go below it, the market is going to rebound. Yeah. Okay, so then first take note of that. Okay, second to take note. Okay, let's look at the US market for tonight. Now, the US market tonight, seemingly it should be going down, should be, because it's now below P2. All right, but the KSI is very green and it's up if it's actually uptick. So that means that the buying will be there. So as long as the market comes down, there will be bottom picking, and traders can watch out for that. Yeah. Now, of course, if the market goes up and break the RL, then that means that the market can go higher. Now, the paradox here itself is that, right, is what you see whether anyone can forecast what will happen next. So to me, the upside itself with the MLP at 34,973, that is the upside. The downside itself can go all the way to the BNB SL level. All right, this is what I'm seeing from the market. Yeah. Okay. Okay, the next one is Nasdaq. Now, Nasdaq is a doji directional day today, guys. So must be very careful. If the Nasdaq stays below OP, it will sell. So now it's below OP, that's why it's selling off. Now, pivot 2 is 14,647. If the market really break MLP and break below the pivot 2, then easily this will come here itself, and that will be, let me just take a look. $14,410, yeah, around there, yeah, 14,000. Okay, so now we're talking about 14,647 first. Then we talk about 14,410, a bit far away, so we wouldn't cover that too much now. Okay, done. Okay, let's look at the next one. We will have the S&P 500. S&P 500 now is hovering above the MLP at 45.33 level, so it's around there. The upside, you can see if it goes higher, you go to pivot 1, and that's 45.80. Okay, MLP is 45.33. We are where we are now. If it drops down, then we can see 45.07. Okay, got it? Okay. Then, of course, you have Hang Seng. Now, Hang Seng is now coming down very nicely, like as if that is all ironed out properly. Now, Hang Seng this morning came down, touch and recover, and now we are back up to we are above the MLP now at 24,645. So the thing is this, if the market breaks above 802, this will push the Hang Seng higher. So watch out for this. The market will go back up to 22,403. Okay. All right, that's only if the market breaks up above the pivot 1. If not, it's all right. The market will have to stay down, and you may test 21,066, which I don't think in the near term it will happen. Not now, maybe later. Okay, so that is the Hang Seng, and let's look at Nikkei. Nikkei is still surging higher because of the stronger dollar, which is actually pushing the yen weaker. So this is the thing that's why Japan seemingly is on the side of the US. So now the thing is this for Nikkei is that it went up first initially, touched the MLP 28,287, but now it came back down and goes below the P2. And this is going to be a bit of a problem because MA 200 is 27,949. So the market could have some tangle over there itself, but the KSI is green at the moment, so it might actually let the younger generation make sense. Now DAX again is on sideways for the last 6-7 days. Rationale is supposed to be they are just waiting for a big movement to come, but at the moment now there's nothing for them, so I will not talk about this. Now crude oil yesterday on Friday is a doji. All right, and today now you're trying to learn whether can the market breaks above 111.12 to create a new what do you call place upside, right? Okay, 111.15 is MLP at the same time. So this MLP and the pivot 1 is almost identical, yeah. So it's going to be a stack. The market will push towards there. So okay. Now, on the flip side, it's 10.40 is the downside. So there's nothing much we can talk about, but something is there. Here's the KSI jump. So seemingly the other party didn't see it. Okay. All right, we're going to come to the end of today's MAO. Just bear with me for a while. I know it's lunchtime. You're tired. I am too. I just want to have some lunch too. All right, so this is the gold price right now, and gold price is coming off. Now, do note yesterday is a doji directional day, so it means that if the market cannot go up, it will come down. And of course, now it has triggered the MLP at 1957 beautifully. The high is 1958. Remember, my basic student, I told you, right, if this is the MLP, all right, and if the market touches here and come down, you just need to sell. So you can see that it could have happened. It could happen already. It's daily chart. And of course, after you sell, the next number will be the target, right? So that's what you can see right here. So if you look at the intraday movement right now. So first of all, the market really touches the MLP. Can you see that? It touches MLP, touch again, cannot stay up. Then it breaks below OP. It sell until here. It rebounds a little bit and then sell here. Okay, so yes, indeed, as long as you can see that, why is the gold price coming down despite the current situation? It's because gold and dollar, they don't go hand in hand in a way. Okay, right, that's the reason why you can see that the gold price is coming down because today the DJDD, all right? Please understand that. Okay, so that is gold as well as silver. Silver also did the same thing, and silver may go into a big movement soon because there is some dots here itself, quite a fair bit, yeah? So silver going to go into a big movement soon. So traders, you need to be on standby, yeah? Silver could be this way, it could be down all the way. So you need to be standbying on this. Okay, all right, so let's look at the last two will be Bitcoin and Ethereum to wrap it up for today's MAO. Now, Bitcoin, Ethereum first, let's go on Ethereum. Now, Ethereum really continued to go up. Now it has already hit my target of 3,300. My target has been reached, okay, fantastic, well done. The question is this, do we trade Forex? I mean, sorry, this Ethereum and Bitcoin now, not at the moment, but I think that recently the way you see how structured this movement is, seriously, you really not to care so much. You just follow the rule and just trade accordingly. You should be able to strip into make point. Yeah, also winning here itself. Now 303, I think is a good level. Take some profit. The most is 3,426. Once we reach either here 3246 or 3300, and you're getting a bit untidy and you're getting a bit like lethargic, then of course taking some profit makes some sense. Yeah, 3300 already reached already. Right, Bitcoin. Now Bitcoin has went past my target. I say that you go to 44,300. Yes, went past it by 2,000 points. Wow, exciting. Now again, you can see the system really work. At the start of here, the boys already accumulated, and there was no signal over here. So every day itself, you just have to hold on to your buy. All right. So there's something that you can be upset of, but don't worry. The thing is this: next time when the market comes down, how it goes down, how it goes up is how it comes down, and vice versa. How it goes down will be how it goes up. Okay. So traders, don't worry about this. This is the least important of things. Just take note of that. Okay. So to just summarize it for once, okay, remember. My personal belief is that the bond market itself is in serious trouble, and this is going to persist further. And of course, when that happens itself, right, people have done the bonds, and that will make the whole thing very scary. All right. And because the reason why of that, that's why I think that we should buy some VIX to just protect ourselves. All right. And look at it. Okay. There's a request to look at Occidental. Okay. Just for the sake of that, I will do that right now for Occidental. Okay. So watch out for that. Now, for me, crude oil, in my opinion, will still go higher in the midterm, but it will take some time because of the dollar now moving. Now, for Occidental, you can see that it actually pulled back the last 3 days. From the high of $63, it pulls back to about $57. Now, to me, again, this is a very good time to buy because this is where Warren Buffett buy at about 36. And this is where Warren Buffett buy again, let's say hypothetically, so he buy at 58. So do me a favor, right? 36 and 58 plus together divide by 2. What number do you get? All right, take this number, 36 plus 58, plus them together, divide by 2. What number do you get? Can anyone tell me? $36 plus 58, you get 96. 96, right? Yeah, 96 or 94, sorry, 94. 94 divided by 2. 58 plus 36 divided by 2. 47? Yes, correct, 47. 47, yes, correct. Now, 47 will be the pivotal point for this counter. Now, let's say hypothetically, okay, because of whatever I forecast, let's say the stock market really come down by 3,000 points. Occidental Petroleum will also come down. It won't run away, okay? It won't be like, well, unscathed. Unscathed will be even better. Likely, it will come down to 47, and then that is where this will grind. And then after that, this is going to go up to $90. Okay, so this is my view for Occidental Petroleum. Now that blue line is only if, let's say, I'm correct on the stock market. But if let's say I'm wrong on the stock market and the stock market gear up to buy, right, then of course Occidental Petroleum will go to $92 at the fastest of speed. Can you understand that? So the pink line is to predict that if the market has no problem, keep on going higher, then of course $92 will be the midterm target. But if talking about if the stock market pulls back significantly, then of course a stock market pullback to $47 will be a good time to buy. Now, do note at 36 and 58 itself, right? Why I put these two numbers? 36 is where the Warren Buffett started to buy. 58, let's say he hypothetically bought at the high. So you take the two extremity divided by 2, you get 47. So I'm pretty sure if the market comes down to 47, I am very sure that this Warren Buffett will come in and buy more instead together with you this time. Okay? All right. So that is what I feel that will happen. But of course, everybody has their own right to see the market and you will make your own decision. Yeah. Okay. Thank you very much once again. Before you go, remember this, my class itself, if you think that you want to join our premier class, just contact Richard at 9274-9213. My class on the 2nd and 3rd of April. All right. That'll be all for today. Take care. Have a great day. I'll see you tomorrow for my students. Yeah. Bye-bye.